things seem to be definitely intensifying. So the second round bids were due yesterday. The reporting so far seems to suggest that Netflix has mostly a cash bid. That's a little bit of a surprise given that, when you compare Netflix with both Comcast and Paramount Skydance, obviously that stock has the most value. They're trading at almost 30 times forward EBITDA compared to a Comcast, which trades at about 5 times. So obviously, it just goes to show that Netflix is very, very interested. There was obviously some, speculation earlier whether they were a serious bidder or not. I think this kind of puts that to rest. The offers this time are binding, means if the board likes something that it sees, they can absolutely go ahead and bring this whole process to a conclusion pretty quickly. So right now, just waiting to hear on the actual numbers. We haven't heard any reporting on the actual bid numbers themselves. Warner Brothers, of course, looking for $30 a share.
Geetha, Bank of America has a note that calls the bidding war for Warner Brothers, quote, industry realignment. Is that a fair characterization? And how do you see this bidding war transforming the industry?
Absolutely agree with that. I mean, you have Warner Brothers, which is one of the most iconic studios in Hollywood. You have a great streaming service in HBO Max. You just look at the Warner Studio this week this year at the box office. They've had an absolutely phenomenal run. So they're leading with about a 28 to almost 30% share of domestic box office. So this is a huge studio that could obviously, or a huge company even, that could, completely reshape the media landscape. And it is transformative in many, many ways. So if you think about, Paramount Skydance's streaming assets right now with Paramount Plus, they have about 70 million subscribers. You add HBO Max, you get over 200 million. Same is true for Comcast. This is kind of an existential deal, I would say, for both those companies. And absolutely transformative. So, you take Warner Brothers and Paramount Skydance, for instance, if those two companies combine, that basically then becomes the second largest media company after Disney. So again, huge, huge things at stake here for all of these three bidders.
How about valuation here? The company has said in the past that they would like $30 a share. The stock is trading at just north of $24 a share. John Malone, the company's chair emeritus, and of course, one of the biggest deal makers in media and telecom over the last 50 years, he says that number is, quote, possible. How do you think valuation's going to shake here? What's the price that's going to clear, do you think?
I think it's definitely going to be above $28, Paul. So we know that, when all of this had started, Warner Brothers was trading at about $12 a share. We're already up to $24. We know that in the last bidding round, Paramount Skydance offered close to about $24, which was rejected. Now, if you just think about the two parts of the business for Warner Brothers Discovery, you have the TV networks business, again, throwing out a lot of cash, but not necessarily big in terms of valuation. I mean, this is a melting ice cube. The multiple that you would slap on this part of the business would be maximum about a 4 or 5x. But then you think about the streaming and the studio assets. Now, that is where you have your scarcity asset. You have a lot of the IP sitting there. You have a streaming business that is turned profitable, that could become extremely profitable over the next few years. And so that's where most of the valuation is going to be. And, we ran some numbers. We think that just the streaming and the studio portion of the business alone could be worth about $28. So when you think about that $30 per share that John Malone says is possible, we absolutely think yes.
Geetha, can you please talk to us a little bit about what some of the long-term strategic advantages will be for Warner Brothers when this deal closes, whoever the final winner is?
I think for the final winner, of the Warner Brothers asset, one thing is it obviously completely transforms the business in terms of increasing revenue, increasing scale, increasing EBITDA. But I think the big thing that everybody is looking for really is the synergy number. And if you think about, Paramount Skydance, which is really looking to acquire all of Warner Brothers, so not just the studio and streaming, but also the linear networks, the synergies are going to be sizable. We think it could be anything upwards of $5 to $6 billion. And that's really where, a lot of this is going to kind of flow down to the bottom line. Of course, there's always this question about how much of synergies can be extracted. But actually, Warner Brothers Discovery themselves have kind of provided us with an excellent template. They've done a fantastic job when it comes to extracting synergies, both with the Scripps transaction as well as with the most recent Warner Brothers and Discovery merger. So we think if they lay out a good plan, it can definitely be done. And so synergies really is the name of the game here, apart from, of course, monetizing all of the IP, because they do have some of the best brands in the business.
Comcast, how credible are they? I mean, we know the Roberts family, Brian Roberts, loves to do deals, rarely goes more than 5 or 6 years without doing a big deal here. How do you handicap them here?
Paul, so industry sources seem to suggest that Warner Brothers Discovery actually wants Comcast to be the winner. And I think a lot of this has to do with the fact that, David Zaslav obviously has this history with NBC. He used to work there. He obviously knows Brian Roberts extremely well. But I think David Zaslav also kind of sees this as a path for him to ultimately run NBC. He doesn't necessarily want to exit Hollywood just yet, which is what would happen if he sold to either Paramount, Skydance, or to Netflix. So I think in many ways he does want to kind of sell to Comcast. Again, it's going to come down to whether Comcast can put up the money, because they are right now in a very, very tricky, precarious situation. Their cable business is struggling. The stock is trading at historical lows, 5 times EBITDA. Wow. So really, really in a tough spot. And they have to come up with a majority cash bid. So we're looking at something like about $60 billion. This has to be debt financed. And so you kind of think about all of that incremental interest expense for them, Paul. I mean, this is going to be dilutive to free cash flow, and I don't think investors are going to like it.